Hi, I'm Laurie Oberman, CEO of Talking Business, and we are discussing financial terminology part 2. But I'd like to begin by looking at the end of financial terminology part 1, where we were studying trading volume compared to average trading volume. Now, the variations may be when the trading volume is lower than average, a holding pattern where investors are waiting for or expecting data to be published regarding either the economy relative to that company's performance or details about the company's performance itself, financial statements, and so on. Once this information is released, we'll see an increase in trading volume, and then it may be above the average trading volume. The next item here at the top of the right hand column is market cap or market capitalization, which is calculated by multiplying the total number of the company's outstanding shares by its current market price per share. So in a very simple example, a company that has 3 million shares at a price of $50 will have a market cap or market capitalization of $150 million. As you can see here on the Teva data page on Yahoo Finance, we're talking in billions. This brings us to the next item, the beta. This index shows us the relative riskiness and volatility of the share compared to the market. So if the index is 0, then there's no correlation between what's happening in the market and the direction or the volatility of the trading in this particular share. If the index is 1, it means that the share will move with the market. So that if the market increases by 0.5%, the share will increase by 0.5%. Alternatively, if the market falls by 0.5%, then the share will also go in that direction. If the share has an index above 1, as you can see here with Teva 1.37, that means it's better than the market, more volatile. And so if the market goes up by 1%, Teva will go up by more than 1%. And conversely, if the market falls by, say, 1%, then the Teva share will also fall by more than 1%. Next, we come to the PE ratio, which is price to earnings, calculated by the share price divided by its earnings per share, which we'll come to in a minute. It's an indicator of the market feeling towards a stock, and it indicates the amount you have to invest in the price in order to receive $1 of its earnings, and it's a major indicator for investors. The TTM is trailing 12 months, meaning the performance over the previous year. Now, as promised, we're going to discuss EPS or earnings per share, which is a direct indicator of the company's profitability. Here in the case of Teva, we can see it's a negative number, meaning that the company made a loss. This also explains the previous item of price to earnings, which is indicated here as not available or not applicable. And that's obvious if the company is making a loss, because then there are no earnings, so you can't calculate price to earnings. Or that explains those two items together. Here we have the earnings date, which is the date on which the financial reports, quarterly, annual, executive summaries, and other strategic information is released to the public. Investors, of course, are very interested in these figures because a better than expected performance will send the share upwards, and a poorer than expected performance will send the share downwards. As you can see, there is nothing planned at the moment. For the forward dividend and yield item, I've decided to move back to Apple because, as you can see with Teva, there is again no information. So The forward dividend for Apple or for any share is how much dividend we receive per share for those of us who hold that particular stock, and that's 82 cents, and the yield is the percentage of that stock price at the moment. As you can see, the stock price is around 106, so 82 cent is 77% of that price. These two are, of course, only part of the profit we get from holding shares. The other part of the profit we get is the capital gain, the increase in price. The ex-dividend date here for Apple, the 6th of August, tells us who is eligible for the dividend during this distribution. And the situation is this: people holding the stock up to and including the 5th of August will receive a dividend. Anyone who bought the stock on August the 6th will have to wait for the next distribution and profit sharing with dividend. And the final item we're going to look at is the 1-year target estimate. For Teva, we're back with Teva again. The estimate is $11 this time next year, based on the current price of $10.16. But of course, nobody knows what's going to happen tomorrow, never mind 1 year in advance. So that's the end of the second top tip with financial market terminology. I hope you found it both informative and interesting. Don't forget to press the subscribe button, and I'll be back again with another top tip soon. Goodbye for now.